Continuing the Rorex arc from last night. And just to review, Rorex posted this yesterday. Bidvad, what would you do in this situation? He then went on to explain that the first 30-minute fixed bar had a long trade, and while he was in that long trade, he's saying there was a second fixed bar, but the first fixed bar gave a long. Price didn't hit either the stop loss or the take profit. Price broke the low of the second fixed bar. And I did do a video last night where I believe I basically said none of that matters. What matters is following the very simple plan of trading off of that first fix. Even he has me doing it. It's not a first fixed bar or a second fixed bar or a third or a fourth or a fifth. The idea of the initial 20 trade exercise is you have a fixed bar. For you, it should be the fixed bar. It's the reference bar around which you have built this very simple trading plan. So, I said, you answer this question first. What did you do? And then I would put the response in a video. Now, I did do this video, but this is the response. He did answer. He said that he closed the first trade, the long, for a small profit, which is very troubling, and I'll explain why shortly. And even more troubling is the reason he gives. He says, I closed it because I thought it rejected last week's close. Very, very troubling, this post. And just very, very troubling. Then he entered the second trade short at, again, second fixed bar. No such thing. There is no such thing. There is no such thing. In the video I did a week or two ago where I said, here are what I believe to be the two best fixed bar candidates for doing the initial fixed bar 20 trade exercise. One of them was gold, using the 30 minutes that opens at 7:30 a.m. New York time and closes at 8 a.m. New York time. The second was trading YM, using the bar that opens at 9 a.m. New York time and closes at 9:30 a.m. New York time. I did not say that, and anywhere in that video, that you should trade gold using both, or the YM using both, or that somehow you should even be thinking of taking two trades. Anyone in this thread who's participated, who's had success, has done so by picking one market and trading one fixed bar reference bar each day. One trade per day. Some did this for 40, 60, 80 trading days. And it will click for you. They collect their data during each 20-day exercise. They make a new hypothesis and revise their trading plan if they think they have observed something that could sharpen the edge. I know in one case, at least one, I think two actually, one I may have posted here, the other one unfortunately only shared it via private message to me. But there were two cases where changes were made after the first 20 trade exercise, and those changes didn't actually made the results worse. So then they abandoned that change. But all that's fine. There's no problem with making a change, but you must stick to the trading plan. One trade a day for the first 20 trades. One instrument, one fixed bar. So, where are we at here? So that's what's troubling about this part. But what's troubling here is the only way, Rorex, for you to have closed this first trade for a small profit would be if you closed. I'm on the wrong thing here. If you had closed it, so here's your entry point. That line, you entered just above this yellow line. So for you to close this long that you entered here, you would have had to have closed it above this yellow line. But your stop loss is down here. So again, another deviation from the plan. So now what would I do? Well, I basically described it, I think, last night in last night's video. When I was starting and I did my first, I was using a 15-minute bar. I was trading the NQ. Markets do change. Volatility changes. What's working right now in gold might not work a year from now, might not work 3 months from now. We don't know. But all I can tell you is, if something stops working, there's always something else out there working that you'll be able to find without much difficulty if you really internalize these trading rules and make trading according to your rules central to your identity as a trader. Okay, so what I would have done is this bar closed, I'd take resnap this, I would take my risk reward tool, and since price closed near the high, I would have made sure I get my buy stop in at one tick above this high. So I would have had a buy stop at 4,070.6. And then I would have come down here and would have put my sell stop at 4,040.6. Excuse me. Trade would have been entered here. Once this trade's filled, I would have made sure my stop loss was correct. And that would have been at 4,040.6. I would have made sure that my take profit was entered correctly at 4,088.9. And then I would have just gone on with my day. I would have gone out, get a job, get a hobby, walk, go to the gym, do something. At this stage, that's all you have to do. I certainly wouldn't be thinking, did price just reject last week's close? Price doesn't do anything, but it moves. It moves from level to level. And we have no idea whether it's going to be a reversal at a level or if it's going to break out through that level. The only thing we can control is our entry orders, our stop loss order, and our take profit. And that's all you should do. Because you decided that you were going to add a quote unquote second fixed bar, you allowed confusion into your trading, which is exactly what we're trying to remove. No discretion, no confusion, no questions. So this is nothing. None of this matters. What would Vidvad do? Vidvad wouldn't even notice it because Vidvad would be out playing golf or working his day job. If this is your plan, now you mentioned you thought it rejected from last week's close. Well, I don't see last week's close on your chart. Okay? So that's one thing. You really, if you're going to use pivots, you need to get a charting platform where it will post them for you. Okay? Because this dotted line looks like it's just the last price, which would annoy the heck out of me, by the way. And I think I mentioned last night, you got to get away from FXCM. You don't want to be with any bucket shop. You don't want to be with a CFD broker if you can avoid it. You really want to trade exchange-listed futures. Depending where you are in the world, you may not have access to them. And if that's the case, then I don't know what else to suggest. Maybe you'd have access to futures that are listed on the London exchange or the German exchange. I don't know. I would not trade with FXCM. But the point is, at this stage, you should be monitoring the pivots and price action around those pivots, but they're not part of the trading plan yet. Okay? They're not. So you got to just go with the simple strategy of trading using making your entry orders based on the range of the reference bar, and then your stop loss and your take profit also based on the range of the reference bar. And so you can do that for 20 days straight. And by the way, you're not on whatever you thought you were on day 7, day 8. You're not. Monday's day 1 because you screwed up. It's okay to screw up. And again, I am not, when I say you screwed up, I don't mean it to be insulting. Okay? To me, like, believe me, I'm just as hard on myself as I am on anyone on Forex Factory. I'm harder. I mean, I will, I'm hard on myself. So look, I screw up. I screw up terribly sometimes. I still can do infuriatingly stupid things at times. Usually happens when I'm not paying attention. I'm reading Forex Factory instead of watching my chart. I see what I should be doing. I get, just terrible. Point is, you screwed up. And at this stage, you don't get to complete a 20 trade exercise until you do it lawlessly. Lawlessly doesn't mean that you don't have losing trades. Lawlessly doesn't mean that at the end of 20 trades, the net result might be a loss. That's okay. Lawlessly means you got yourself to your trading station no later than 2 minutes to 8 in the morning, New York time. And then when this bar was about to close, you got your orders in. So what I always do is, if we're closing in the upper half of the bar, I'm going to get my buy order in first. And if price is moving up and it looks like it's going to close at or near the very high, I'm watching my bar timer down here. And when it says there's like 2 seconds left, I already have my order ready to go. And I enter that long order just in case price does what it's done several times this week. The bar closes, and no sooner does the next one open, but it triggers through that price. If I do miss the order, I place a limit order. Okay, so right now this would be a buy stop at 4,070.6. Had this bar closed and price jumped above, I would have placed a limit order to buy at 4,070.6. And I would have allowed that order to set open so long as price had not yet hit my take profit. So that's another thing that VidVad would do. But you just gotta stick to the one fixed bar. I never, ever, ever, ever suggested to anyone that you trade 2 fixed bars in the same instrument, for the very reason that what happened to you yesterday could happen. You'd end up getting a conflicting signal. Now, if I were trading a straight reversal bar plan, that would be another matter entirely. But that's not, no one should be trading that way yet. You need considerable refinements to the plan. And those refinements have to be, really should be things you discover through your data collection as you do consecutive 20 trade exercises. Once you can get through 20 trades, you can revise your plan if you feel you want to, if you feel there's an observation you made that could maybe, again, sharpen the edge. But you shouldn't trade an evaluation account or a live money account of your own until you can get through 20 trades flawlessly. And that means you place your orders, you let your orders execute, and then you manage your risk and your take profit accordingly. And again, I use the 618. There are others who've posted to this thread and who've shared their own trials with me who use a full measured move. They're not happy with taking a 618 to one risk. But I have, there's another who has sent me results that are just astonishing. And the way he trades is he takes his profit out of 0.5 extension to 1. So he's actually taking profits sooner than I. So this is something that can be flexible, but only to a point. It must have, your trading plan must have 3 basic fundamentals. Must have your reference bar, it must define your risk, and it must define your take profit. That's really it. And so you can't be, you thought price rejected. You got to stop thinking, okay? You're not a financial journalist. They're terrible at their job. It's impossible to be good at that job if you feel that market, after the fact explanations of market moves is one of your duties. You can't do it. And now, and what you were doing, and so many at Forex Factory do, is they try to trade as though they're real-time financial journalists. Oh, here's what price is doing right now and why. I have a couple of good friends from Forex Factory who suggested a couple of bloggers to me a while ago. I'm not sure when. Probably a year ago or more. And I'm not going to name these bloggers, but these 2 guys, they're related to one another. They trade similar method. I think the one may have been the student of the other. And they occasionally send out emails. They published a Substack or something, and they send out these emails about their trading day. They don't do it every day, so I've stayed subscribed. And one of them sent out a recap of his trading yesterday. And this is typical of both of them. Now, they both claim to be technical traders. They both claim to have a technical method. And yet, so often, here is how they start out. This is a quote. When I checked the markets before the open, nothing really stood out. With consumer sentiment data scheduled at 10 a.m., I decided to wait before taking any trades. Once the data came in stronger than expected, showing consumers were slightly more optimistic, I considered taking a long. You're not a technical trader if you might consider taking a long based on what news said. Okay? You're not. Anyway, so, again, at first blush, these guys sounded like they knew what they were doing. They looked like they had a good technical method, but it quickly became apparent that they really did not consistently adhere to their method, and they're suffering from financial journalitis. You just can't be that way. Price doesn't reject; it doesn't accept. We've all done it, right? I can't tell you how many times I said, well, this is a magnet for price. Well, no. It's a level. And price moves from level to level. It tests various levels. And I'm not saying that the pivots aren't important, but at this stage, you don't want them to be a consideration in your trading. They might be in the future, but that would be a refinement. You don't want to make any refinements to your trading plan at this time. Okay? So, and one more note, I would just say if last week's close, the prior week's close is not one of the levels I consider pivotal. I'm not saying that it's not, and I'm not saying that you shouldn't. I'm just to be clear, when I refer to pivotal levels, I'm specifically referring to last week's high and last week's low, yesterday's high and yesterday's low, yesterday's close, and then today's open. That's it. I don't do monthly pivots, monthly open, high, low, close. Not saying they're not important. You can go to the Flying Dutchman, read Time Tells, and week after week, he shows examples of how these weekly and monthly levels are noteworthy and can be incorporated into your trading. For my purposes, they're not important to me. Again, I'm not saying they aren't, but at some point, I feel I have to limit the inputs that I'm going to allow to influence my perception of what's going on. Because in the end, I don't really want a perception of what's going on. In the end, I just want to have my trading plan, have my rules, and follow my rules. So anyway, that's what VidVad would have done. I would have stuck to my plan. I'd accept that this is a one traded day trading plan, that it's not whether I win or lose, but how I play the game. Am I following my rules or not? And so, and again, once you have one trade where you've deviated from the solid plan, you got to start your day count over. It's not simply completing 20 days. You must complete 20 days of flawless execution. That's not from me. That's from Mark Douglas. Okay. Everything I speak of regarding trading psychology and such, for the most part, comes from Mark Douglas. Some of it comes from other influences and maybe a tiny bit from my own observations. For example, I reject the idea. See, I can reject. Market doesn't reject. I can reject. Human beings reject. Market is not a human being. Okay, I reject the notion that you should trade for a 2-to-1 or 3-to-1 profit to your risk ratio. I would prefer to swap out a higher win rate and take less than a 1-to-1 reward. But again, that's that. That's for another video. But just trade it. Starting on Monday is day one for you. Rorex, Monday's day one. You got to start over. And your only job is to trade this simple trading plan for 20 days without fail. Let me see. That would be, let me see here. So that means Monday, Tuesday, Wednesday, Friday. Markets are closed for Thanksgiving on Thursday. So next week is 4 days. Then you get into December. So by my count, if you start on Monday, by December 22nd, you can potentially complete your first 20 days of flawless execution of the fixed bar trading plan. And that would be a good time to complete it, because then you can study your results and your data, maybe do some testing on the 23rd, the 26th, the 29th, 30th, and the 2nd of January. And then be ready for your next 20 trades on January 5th. That's what I would suggest you view the calendar over the next 2 months because of the U.S. Holidays and their impact on trading and trading volumes. Uh, that's how I would do it. So start Monday. If I counted right, the 22nd of December, Monday the 22nd should be your final day of a 20-day exercise. Then the next 2 weeks, you should just be resting, relaxing, and reviewing, and then be ready to start your next 20 trade exercise on January 5th. And then we can share your results during that Christmas New Year period, and let us know what your plan will be going forward. But you simply must complete 20 days of flawless execution before you can move on. And if at any time during those 20 days you find that you exited early for a small profit because you thought, whatever, Mars was in retrograde and the store was out of Greek yogurt, or whatever the reason you use, you got to start over. So you really, if you want to be able to get through your first 20 trade exercise before the end of 2025, you must commit to the trading plan. It's very, very simple. But as you've proven this week, it's not always easy, is it? It's not easy to stick to the rules. So no more confusion. This is your reference bar. That's going to tell you where your buy order goes, your short order goes. Once one or the other is filled, you know where your stop order is supposed to be. You know where your take profit is supposed to be. That's all you have to do. And if you can do it for 20 days, here's what's great about it. If you can do it for 20 days, that means you can do it again. And then the more of these 20-day exercises you get through, you're going to become, your discipline is just going to strengthen. And then you will become the beneficiary of the roulette epiphany. And you will make more money and live a life very few can afford. So get on with it. Monday's day 1, not day 7, 8, or 9. It's day 1. You know what your job is. Now do it. Good luck.